Hello students, in this video we will see nearly 55 transactions which will definitely help you to know which account to be debited and credited. It will help you in journal entry as well as while preparing ledger accounts also. I already discussed golden rule of personal, real and nominal account which help you to decide which account to be debited and credited. So let's start with number 1, started business with capital in cash. Started business with capital in cash. So whenever owner, proprietor brings cash into the business, when owner, proprietor invest cash or anything into the business, one thing to clear is account to be credited will be capital account. Okay. So here capital account will be credited. And what comes into the business? So when business started with cash, so the account to be debited will be cash account. The one which comes into the business is cash. So cash account will be debited. See student, now onward I will just mention the name of the account. I am not writing each time word account, but make it clear you have to mention the word account always. If it is asked that which account to be debited and credited, you have to show this word account also. So started business with capital in cash. So cash account is debited and capital account is credited. See, this first column is account to be debited and second column is account to be credited. Now similar type of transactions we will see to make the concept more clear. See, it can be asked like owner put cash into the business. Owner put cash into the business. So it is one and the same. Cash account will be debited and capital account will be credited. Started business by depositing cash into the bank. See here the twist in the transaction, that started business with the cash, but that cash is put in the bank account of the business. So the asset of the bank increase, bank balance of the business increase. So instead of cash you have to give debit to bank account and the other account will be same. See, always whenever owner or proprietor brings something into the business, the account to be credited will be same, that is capital. Now fourth one, started business with machinery. Now here proprietor brings machinery into the business. So the account debited will be machinery. And which account will be credited? Capital account. Started business with machinery, so machinery account will be debited and capital account will be credited. Next is brought personal motor car into the business. See, whatever given in the transaction, whether it is a personal motor car, whether the proprietor sold his any personal property and invested cash into the business, you have to see that what comes into the business. So here brought personal motor car. So what comes into the business? Motor car. So motor car account will be debited. Motor car account will be debited and capital account is credited. Now the sixth one, brought personal saving into the business. So proprietor brings his personal saving into the business. So again cash account will be debited and capital account will be credited. Brought legacy into the business. See, owner proprietor might receive legacy. So that legacy, that cash he invested into the business. So here again which account will be debited? Cash account will be debited. So here we saw in the first 7 transactions, started business with capital in cash or owner put cash into the business. So here cash account is debited, capital account is debited. But when the cash is put into the bank, owner started business and at that time he invested that, he put that cash, he deposited cash into the bank. So bank account is debited, bank account of the business is debited and capital account is credited. Started business with machinery or motor car, so respect to that asset account which comes into the business, that will be debited and capital account is credited. So student, always remember that capital account always get the credit balance. Okay, credit balance. Now next transaction, withdraw cash for personal use. See, when proprietor invests something into the business, that is capital. But when it is given in the transaction that proprietor, owner, proprietor, entrepreneur, he withdraws something from the business. Okay, and it is for his personal use, so that becomes the drawing of the. So in the both case, drawing account will be debited. Withdraw cash for personal use, or owner withdraws cash from business for personal use. So what goes out of the business? Cash. Being real account rule, debit what comes in, credit what goes out of the business. So cash account will be credited. See, when owner invests something, capital account is debited, and whenever he withdraws something for his personal, for his private use, drawing account will be debited. Suppose it is given like paid for life insurance premium. Paid for life insurance premium. Then also the same entry will come. Drawings account will be debited and cash account will be credited. Okay, because life insurance premium will be for owner. So it is for again for personal use. So now we will see next transaction. Now here again the word is withdraw. But this withdraw cash from bank, it is given as for office use. See student, remember this difference. See here what is given, withdraw cash for personal use. So whenever word personal use comes, that means it is a drawing. But here what is given in the next transaction, withdraw cash from bank for office use, So the account debited will be cash account. Cash comes into the business. The asset cash increases and the bank balance get reduced. Okay, so cash account debited and bank account credited. Next one, bought furniture for cash. Bought furniture for cash. Now remember student, quickly revise. Real account rule, debit what comes in and credit what goes out. So whenever any asset when we purchase, we have to give debit to that asset account because it comes into the business, and what goes out of the business? Cash. So we have to give credit to cash. If it is paid by check, we have to give credit to bank account instead of cash account. So bought furniture for cash, what comes into the business? Furniture comes into the business. So furniture account will be debited, and which account will be credited? Cash account will be credited. So while posting entry in the ledger account, what we do? We are writing entry, we are writing this transaction in the cash account credit side, So if you remember student, last time when I explained you ledger account, see whenever cash comes into the business through capital also, we are writing in the cash account debit side. When there is a cash sale, we are writing in the cash account debit side. And when cash is going out like sundry expenses or wages, we are writing on the credit side of cash account in this ledger account, on the credit side of cash account. Okay, so like when the bought furniture for cash, while putting entry in the cash account, we have to write down on the credit side. When the shelves are purchased for the business, we are writing here in the cash account credit side shelves. So it is just like this. When furniture is purchased for the cash, furniture comes into the business. So furniture account is debited and cash account is credited. One thing again you have to remember student, whenever assets are purchased, asset is purchased, don't write here purchase account. Don't debit to purchase account. We have to use word purchase only for the mercantile stock or goods. Okay, when we purchase goods, then only we have to write down purchase. But if anything other than goods are purchased, we have to give debit to that particular, to that respective asset. Now here 12th, bought motor vehicle in cash. See, I am explaining you similar type of transactions in a group to get more clear with the concept. So bought motor vehicle in cash. So motor vehicle account will be debited. Motor vehicle account, okay, and it is purchased with cash, so cash goes out, so cash account is credited. See students, I am writing here short form for account, but whenever you are writing in exam, you have to mention this full word ACCOUNT account. Okay, now the same type bought motor vehicle, but what it is given on credit from Khan. So whenever it is credit purchase, the debit effect will be same. What is coming in the business? Motor vehicle, right? So motor vehicle account will be debited. But when it is purchase on cash, that time only cash is going, so we are giving credit to cash here. When it is cash purchase of motor vehicle, but now it is credit purchase, so you have to give credit to the person's account from whom it is purchased. So the name of the creditor you have to write on the credit side. So account to be credited is Khan's account. What comes into the business? Motor vehicle. From whom it is purchased? Khan. See, on the transaction number 12, bought motor vehicle in cash. So motor vehicle account is debit and cash account is credit. But when it is purchased on credit, motor vehicle account is debit. See, whether it is purchased on cash or whether it is purchased on credit, in the both case motor vehicle comes into the business, right? But in the cash transaction, cash paid immediately, so cash account is credited. But in the credit transaction, the cash will be paid in any other later date. So here whose account will be credited? Khan's account. So in the ledger account of Khan, we will write down in the credit side, and in the motor vehicle we will write on the debit side. Now 14th one, bought building on credit from NHC. It is also same type of transaction. What comes into the business? Buildings, right? So building account is debited. From whom it is purchased? From NHC. So NHC account is credited. Now 15th, the purchase of machinery for your business and paid by check. Okay, now here it is a payment is by check. What comes into the business? Machinery, right? So machinery account is debited, and what goes out? See, when motor vehicle is purchased by cash, so cash goes out, but here it is paid by check. So whose balance reduced by the amount? Bank, right? Banks. So bank account will be credited. See student, listen to video very carefully till the last transactions. Your many concept will be definitely clear, and you will understand which account to be debited and credited for various transactions. You can revise this video also twice, thrice, and also student, like the video. If you like it, it will really motivate me to make more videos. Give you a comment, put in the comment what type of the video you want me to make, what type of educational video you need. So I will try to make the same, and also share it with your friends. Subscribe the channel and press the bell icon, so you will get the notification of my next video. Now turning to the next, bought furniture on credit from Mohit. See, you have to read very carefully that whether it is a cash transaction or whether it is a credit transaction. So here it is purchase on credit. What purchase? Furniture. So furniture account will be debited, and see, if it is on cash, cash goes out, so cash we have to give credit, but here it is given on credit, so you have to write down the name of the person from whom it is purchased. So it is Mohit. So furniture account is debited and Mohit's account is credited. Now see student, now some different type of transactions are there. Now it is not asset purchase, now it is goods. Bought goods paying in cash. Bought goods paying in cash. So one thing is clear, that whenever we purchase something and if cash is going out, so you have to give credit to cash. See, whether it is asset purchase, like here motor vehicle purchase in cash, so cash account is credited. Whether goods purchase, cash goes out, so cash account is credited. So whether it is asset purchase or goods purchase, we have to give credit to cash. But if it is asset purchase, give debit to that asset. But and it is if it is goods purchase, then you have to write here word purchases. Okay. So purchases account is debited and cash account is credited. See here, when motor vehicle is purchased on cash, motor vehicle account is debited and cash account is credited. But when the goods are purchased, you have to give debit to purchases. Don't write bought goods or goods, write word purchases. So purchases and cash. Now bought goods on credit from Meera. The same rule you have to apply. See student, it is very easy. What is purchase? Goods are purchased. Whether it is cash or credit, you have to write down here purchases. Okay. See, the same rule we applied here. Whether it is cash or credit, we have written that asset. Whether motor vehicle purchase on cash, so we debited motor vehicle. If motor vehicle purchase on credit also, what we have written? Motor vehicle only debit side. So same way, whether purchase is on cash or credit, you have to give debit to purchase only. But if it is on cash, credit side write down cash. If it is credit, write down the name of the person from whom it is purchased. So it is Meera. So Meera's account will be credited. So bought goods paying in cash. So purchases account debited, cash account credited. And bought goods on credit from Meera. So purchases account is debited, cash is not going out, right? We are purchasing on credit. So why we will give credit to cash? Why we will write cash on the credit side, right? Cash is not going. So Meera's account is credited. Now in the same way, purchase goods from Priya. Purchase goods from Priya. So whether it is cash or credit, we have to give debit to purchases, right? So purchases account is debited. Now say student, if it is nothing is given, whether it is on cash or credit, and the name of the person, name of the creditor is given in the transaction, like here it is given purchase goods from Priya. So we have to assume it that this is a credit transaction. So write down name of the person from whom it is purchased. So Priya's account is credited. When purchase goods from Meera on credit, so purchase account debited, Meera's account credited. When goods purchased from Priya, purchase account is debited, Priya's account is credited. When it is on cash, though suppose it is given that purchase goods from Priya, but it is given that in cash, so instead of Priya you have to write down cash, but if it is specifically given, okay. See the next transaction, purchase goods for cash, it is given for cash. So what we have done, purchases account debit and cash account credit, same way. See, purchases account is a nominal account, students. So nominal accounts rule says debit the expenses and losses, credit the income and gain. So as purchase account is nominal account, debit the expenses. So whenever we purchase something, whenever business buys something, purchase goods, so we have to give debit to purchase account, being expenses, and cash is going out, so cash account is credited. Sometimes it also given cash purchases. The meaning is same. Cash purchases means goods are purchased by cash. So purchase account is debited and cash account is credited. The word it can become like bought goods for cash. Again it is same. So entry will be purchase account debit and cash account is credit. What is given in 23rd? Bought goods on credit from Mehta. So here purchase account debit and from whom it is purchased? Mehta. So Mehta's account will be credited. Okay. So when it is purchase on cash, purchase account debit, cash account credit. When it is purchase on credit, purchase account debit, Mehta's account credited. Now when it is given paid cash to Mehta, see when it is purchase on credit from Mehta, we credited Mehta's account. He is a giver of the goods. Mehta is a personal account. So debit the receiver, credit the giver. So his account we have credited. Now when we are paying cash to Mehta, who is receiver of the cash? Mehta is receiver. So Mehta's account will be debited. And what goes out of the business? Cash goes out of the business. So cash account is credited. Suppose it is given that check is paid to Mehta. So instead of cash you have to write down word bank. Now sold goods to Lulu. See now whenever the goods are sold, so you have to use word sell. But if any asset is sold, instead of sell you have to write down that asset name. So now purchase is over. Now we are seeing some transaction for sales. See sales is also nominal account. Nominal account says debit the expenses and losses, credit the income and gain. So sales being income, we have to give credit to sales. Okay. So which account is credited? Sales account is credited. Now if cash is coming immediately, give debit to cash. If it is on credit, give debit to that person's account, debit the receiver. Say student, listen very carefully, it is not confusing. Okay, but if you listen carefully, 100% your doubt will be clear. If you just listening like video is going and your attention is somewhere else, you will not clear with the effect of debit and credit. So sold goods to Lulu means Lulu's account is debited and sales account is credited. Always remember, very easy to remember. Purchase comes always debit side, sales comes always credit side. Purchase is debit side and sales always comes on credit side. Now again sold goods on credit. See, for all the transaction of sale, whether it is a credit sale or whether it is a cash sale, everywhere you have to give credit to sales only. See, sold goods for cash also, sales account cash, sales also, sales account will be credited. Sale of goods on credit to Khushi, here also sales account will be credited. Okay, so it is easy. See student, only what will be the difference? When we are selling on credit, give debit to that person's account. That customer is our debtor, right? He is the receiver of the goods and we will receive the money in some any future date, at any future date. Now sold goods on credit to Rupa. So here Rupa's account is debited and sales account is credited. Now sold goods for cash. Sold goods for cash. Here which account will be debited? What comes into the business? Cash comes into the business. See student, suppose here some name is also given. Sold goods for cash. Sold goods for cash. To suppose it is given to Percy. Then also entry will be same. Which account is debited? Cash, and sales account is credited. No need to give debit to Percy because he is giving immediately cash. So no need to mention his account because account is settled. When we are writing the personal account, when we have to receive money from that person or we have to give money to that person. Now cash sales. Again cash sale means what? We are receiving cash immediately. Now sale of goods on credit to Khushi. Now here goods are sold on credit. So instead of cash we have to give credit, we have to give debit to that person's account. That Khushi's account is debited and sales account is credited. Now Khushi paid to us. When we sold goods to her, she is a receiver of the goods, so her account is debited. Now when she is paying to us, Khushi paid to us, so her account will be credited. Khushi's account is credited. And what she is paying? Cash. If she is paying check, we have to give debit to bank. Now goods returned to us by Khushi. See, when we sold goods to her, Khushi's account is debited and sales account is credited. Now when she is returning some goods to us, so sales return account will be debited. Sales return account will be debited. Or you can also write down return inward. See, when we sold goods to her, her account is debited, Khushi's account. But when she is returning us some goods, okay, goods returned to us by Khushi. So when we sold her goods, her account is debited, and when she is returning us some goods, so her account will be credited. So Khushi's account is credited. See student, always remember sales account comes on credit side and sales return comes on the debit side. Okay, instead of sales return you can also write down return inward. Okay, now what is given? Paid to a creditor Hitesh by check. So we are paying to whom? Hitesh. So who is receiver? Hitesh. So his account will be debited. Hitesh account is debited. And what is going out of the business? Money is going in the form of check. So bank account is credited. See, when someone is giving to us, we have to credit her account, his account. And when we are paying to someone Who is the receiver for the business? That person. So the account will be debited. See students, to avoid the length of the video, I am making another video. There are some more transactions. See student, you can see still 2 pages are there, and go through that video also, because there are some more transactions which are very important. Account to be debited, credited for nominal account. Okay, thank you students.